Well, one, I just like to compare the size of settlement volumes because, like you pointed
Right.
out, it is a comically large number. You know, America's GDP is measured in the tens of trillions,
Yeah.
and but actually, gross settlement volumes are literally over a quadrillion. Um, and the reason I find that chart kind of remarkable is it's basically the same number of transactions that Bitcoin can do.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. There has been a significant investment of $418 million spread across various funds, including a $238 million stake in BlackRock's iShares Bitcoin Trust. This move is seen as a positive development in the Bitcoin ETF market, as the SEC has shown increasing openness to mainstream Bitcoin exchange-traded funds. This could potentially lead to a bullish momentum for Bitcoin prices. Investment expert Lyn Alden recently discussed the potential of Bitcoin as a store of value and the challenges it faces in terms of volatility and regulation during an interview with journalist Paul Barron. Alden also highlighted PayPal's entry into the stablecoin market with PUSD, which has quickly reached a valuation of $500 million. While established players like Tether currently dominate, Alden emphasized the impact that evolving regulations and the rise of yield-generating stablecoins could have on the market. Despite these complexities, the future of Bitcoin looks promising. Alden predicts that Bitcoin's price could rise in the near future due to growing institutional interest and positive regulatory changes. And lots of things Lyn Alden discusses, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance. Thanks.
Yeah, so historically, Bitcoin and stablecoins have kind of been the two killer apps of crypto, right? They're the two things that have really caught on with traction through bull markets and bear markets alike. Bitcoin is an emerging store of value. Basically, it has superior monetary properties than most other monies we're familiar with. But because it's still small, it's still not widely held.
Hmm.
People try to build leverage on it. It goes through these cycles. It's volatile as it reaches its whatever its total addressable market is, or as it gets close to what it eventually will be. Stable coins are just dollars in digital form. It helps serve the need for dollars globally. The demand for them, and there's really so far there's two main use cases of stable coins. There's one that's basically the unit of account for trading and DeFi on various crypto platforms. A lot of that's going to be on Ethereum, and then the other big usage of stablecoin is basically demand for dollars in the global South. Much of
Right.
it's satisfied by Tron, so it's almost like two different worlds of the same asset. As a near-term temporary store of value, like working capital, that's where stable coins are very useful. Basically, the ability to tolerate volatility is somewhat of a privilege. Basically, the more financially comfortable you are, the more you can say, I'm willing to
Exactly.
hold something for the next 4 years. Whereas stable coins, you can kind of think of them as your checking account
Hmm.
if you're in one of those environments where dollars are useful. So thus far, network effects have been shown to matter. Liquidity kind of begets more liquidity. And so far, Tether's network effect in this has been pretty remarkable,
Right.
probably stronger than I would have guessed. I've also been watching some of the yield generating stablecoins, or you can kind of think them as tokenized T-bills, things that try to pass on the yield to the holder rather than the yield being captured by the issuer. And even them, I mean, they've grown, but they're not exactly capturing market share very quickly.
Right.
And so network effects are clearly pretty strong among stablecoins. And I don't have a firm view on how many there'll be or how much those network effects will entrench because some of it is like a Boolean outcome of regulations, So
Hmm.
some of the onshore ones try to, turn the arm of the state against the offshore ones, and you kind of go back and forth there. So there's some outcomes that I wouldn't try to predict. I do think it's rational for these various entities to try to get into the stablecoin market, given how big and potentially
Right.
profitable it can be. But it's hard to judge the outcome. So I think that given status quo, I think Tether's in a very strong position. I mean, a prime dealer now, for example, has been more supportive of Tether than the rivals onshore. And so, given like an absent of very strong efforts to change that, I think the status quo likely continues. I think that domestically, obviously, some stable coins could continue to gain market share, but globally, Tether is so far in the lead that it would take pretty heavy disruption for that to change. So my assumption is just current momentum continues.
Bitcoin experienced a further drop in August due to a new BTC transfer by the United States government. This added to the selling pressure on the largest cryptocurrency, resulting in a negative reaction. The US government's largest shipment of confiscated coins this year, totaling 10,000 BTC worth $581 million, was heading to the exchange Coinbase, according to data from crypto intelligence firm Arkham. Unfortunately, this event overshadowed any relief from macroeconomic changes in the US, as the Consumer Price Index failed to boost BTC price performance. Reviewing the events, the analytics platform Look and Chain revealed some copycat behavior. Throughout 2024, the US government made 3 transactions transferring a significant amount of BTC, totaling $1,159,940, $9,664 million, to Coinbase Prime. Interestingly, within just 3 days of the first 2 transfers, the price of BTC experienced a drop of up to 5% against the dollar. According to Axel Adler, a contributor to the on-chain analytics platform CryptoQuant, it appears that significant market players have been influencing the risk-off reaction to the latest transfer by consistently selling the news. Arkham provides updates on the movement of coins on Twitter. It's interesting how quickly the bears begin selling off the market. According to him, the sale of 10K BTC from the US government doesn't actually have any significant impact, but the mere occurrence of it seems to trigger quite a reaction. In recent months, there has been a lot of talk about nation-states selling off their BTC holdings, which has led to a short-term, bearish sentiment in the market. Germany has completed the sale of its entire tranche, resulting in Arkham's tag wallet now holding only 0.007 BTC. The offloading process occurred over the course of June and July, and the remaining balance prior to the sale was valued at approximately $3.5 billion. Within a week of the final sale, the value had decreased by $400. According to popular social media commentator and YouTuber Quinton, Germany's loss of $124 million in profits will be remembered as one of the most significant mistakes a nation could make. Let's get back to Lyn Alden interview.
So I think that like the biggest use case here is international. In the US, we generally have fairly good payment systems. Where we run into issues is when we're conducting business across border, and that's where
Right.
stablecoins have been very useful. Some of it has been regulatory arbitrage that, like, things could be easier in the banks as well, but they generally have this more red tape on things. I don't try to judge timelines too much, and like I said, there are Boolean outcomes, legal outcomes, or lawmaker outcomes that I'm just not the expert in. But basically, I just continue to be structurally bullish on the market cap of stablecoins. And for what we've seen so far, there are fairly strong liquidity network effects for the leaders. Well, one, I just like to compare the size of settlement volumes because, like you pointed
Right.
out, it is a comically large number. America's GDP is measured in the tens of trillions,
Yeah.
but actually gross settlement volumes are literally over a quadrillion. Um, and the reason I find that chart kind of remarkable is it's basically the same number of transactions that Bitcoin can do. Basically, it's somewhere around the same number of transactions per second on average.
hmm
The
hmm
difference being it's not 24/7 and it's permissioned. And so basically, Bitcoin is kind of like a Fedwire, but the global open source one so far are much smaller.
I
Um,
see.
and that's kind of why I made that comparison is that you can build things on top of it. Fedwire handles a comically large amount of processing with a fairly small number of transactions because it's the bottom of a layered stack. I think of a long time. I think we're 15 years in, and I think over the next 15 years that trend's going to
Okay.
continue of less volatility. Basically, in my view mainly around it being widely held. If it's
Okay.
something's not widely held, one big player can leverage and blow up and move the market, or buy in and move the market. Whereas when you get 5x or 10x more just broad distribution of the asset, you have more.
Hmm.
There's historically been a cycle of distribution where during bull markets, kind of longer term whale holders will trim their holdings into that bull market and all that liquidity. And then during bear markets, generally kind of rotates back to the stronger hands. But every cycle, Bitcoin gets a little bit more distributed, kind of like a startup company becoming a publicly traded company over
Right.
time, growing, get its holder base gets more diversified. And when we hit
Yeah.
a certain point, the volatility just, I think, will diminish over time, and the uncertainty around the asset will diminish over time.
Senator Chuck Schumer, the majority leader of the United States Senate, has expressed his commitment to passing bipartisan legislation in support of cryptocurrency. He aims to achieve this goal by the end of 2024, should Vice President Kamala Harris be elected as president. Schumer made this announcement during the Crypto for Harris Town Hall meeting, which was organized by a grassroots crypto advocacy group that seeks to influence Harris's presidential campaign and promote a reset in crypto policies. Schumer emphasized the importance of embracing crypto innovation in the U.S., urging lawmakers to take action instead of ignoring the issue. He expressed concern that if the U.S. doesn't act, crypto could thrive in countries with minimal regulation. Recognizing the growth and influence of crypto, Schumer suggested that a Harris administration would not necessarily oppose it. He set a goal to pass pro-crypto legislation by the end of the year if Harris were elected president. Schumer's aim is to bring together members from both sides of the aisle in the Senate to create momentum and pass sensible legislation that maintains the U.S. as the most innovative country in the world. Innovation is crucial in the realm of crypto. Schumer emphasized the importance of lawmakers implementing measures to protect the interests of crypto users, uphold national security, and prevent the misuse of cryptocurrencies by malicious individuals. Democratic Representative Y. Nickel expressed his endorsement of the crypto industry and emphasized the significance of new legislation. He also made a passing comment about Trump's previous negative stance on crypto. Nickel highlighted that Trump had referred to crypto as a scam, but noted that Trump's attitude had changed recently. Senator Debbie Saint, who currently chairs the Senate Agriculture Committee, affirmed her dedication to establishing a framework that safeguards consumers while fostering innovation. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.